Asia has a giant credit bubble that they've been building for the last 10 years or longer that has kind of reached its atrophy level, and it's going to happen over the next 2 or 3 years. So whether that causes the U.S. to have a brief minor recession, I think it's kind of 40–50% chance in the next year.
You heard it. That's Kyle Bass on last week's show talking about a possible U.S. recession in the near future. Bob Olstein is still here. He's also joined by Fox Business All-Stars Sandra Smith and Melissa Francis. Let's start with you, Melissa. What do you think of what Kyle said?
That's a huge point of concern. I don't know about his timetable the next 1 to 2 years. It's certainly very possible. This is just one of the flashpoints out there that people are focused on for concern. China's just one of them. You still have Europe. There are so many things going on. You look at earnings this quarter, which are projected to be very weak. I don't know if that's sandbagging by those companies, if they're going to come in as weak as expected. But there are a lot of different data points that are piling up and not looking great. Add to that, we had the weakest recovery from the financial crisis ever in history, according to the Federal Reserve. And there are a lot of factors pointing out there to weakness.
But Sandra, the stock market is up. Melissa's right. Earnings have been mixed.
What does that mean?
But the stock market is up. The stock market's back to all-time highs. Why?
But does that give somebody a job or increase their wages? The stock market is only one reflection of the economy, right? It's one aspect to it. We are still looking at stagnant wages in this country, and through earnings season, we've seen that profits just aren't that great at U.S. corporations. It's still tough out there. And to Kyle Bass's point, when you look at China, this should be a huge red flag. Credit Suisse is calling this the triple bubble they're calling for. First it was property, then it was China's stock market, and then it turned into China's credit bubble problem. When's that going to burst, and what impact does that have on the U.S.?
Bob, Kyle Bass made the comments 40–50% chance of a recession in this country this year. I think Donald Trump said 100%. Another legendary value investor yesterday, Sam Zell, said we're in the 9th inning of this U.S. recovery and that we will definitely have a recession later this year. First of all, A, do you agree with that? And B, does it matter when you're thinking about investing?
Doesn't matter to me. What I worry about is something that nobody's talking about right now. And it could be bullish and it could be bearish. We're finding 8, 9, and 10% free cash flow yield companies, and that tells us that basically there's still room. We're in 10% cash. We don't time the market. That's one of the highest levels.
What's your time horizon, though, Bob?
2 to 3 years.
2 to 3 years.
And so basically, what I worry about is what nobody's talking about. The fact that there's a recession, problems in China, it's already in the market.
There is a narrative out there, Melissa, about the economy, that this has been a tale of two different countries, really. The stock market's buoyancy has helped the very wealthy, but the middle class and the lower middle class are stagnating. What do you think can be done about that?
That's a really tough question, because the real problem is that, of course, the Federal Reserve has juiced the market. It has forced people to go out and chase yield. And, if you're in the market, you've made a lot of money. Wages have fallen, as Sandra has mentioned. Median income has fallen. Those middle-class jobs have disappeared that people could count on. The reason why we're seeing this fight for $15 an hour is because so many people are trying to live on part-time and minimum wage jobs. That wasn't the case before. So we have seen a great divide. I'm afraid of what the remedy is, because it's really about the jobs that are vacant in this country require a lot of training. A lot of them have to do with computer programming, technology, things that you need to be trained for. These are the jobs that are going overseas, and we have to retrain our workforce to fill these, but that's not a quick task.
We need a business-friendly environment in this country, and I have said that that has long been, and if it's not, it should be the theme of this election. And Donald Trump has won over so many voters by just sticking to the economy and sticking to,
Sandra,
making things better.
Do you think a new president and a new presidential administration can cure the problems that Melissa's referencing?
Well, no, we don't want to look to government to cure our economic woes, but they certainly have they have a lot to do with it, right? But what we need to do is kind of get out of the way, right? We need to let business be business. We need to relieve business of some of those regulations that have weighed them down. Healthcare, look at Obamacare. That has been really difficult on a lot of U.S. companies.
So what policies, Bob, are the right policies for your type of investing?
Basically, we're free cash flow. What's the unemployment rate in this country right now?
Well, there's a big debate about it, but it's between 5 and 10%, how you slice it.
But
the U6 number's closer to 10.
They're saying 5%, right?
That's
and so basically, everybody's complaining. The name of the game is we're in business to make money for our shareholders, and that's critical. I'm not.
Are you trying to make the point that you could have problems in China, you could have a recession in the United States, but as an investor, you can still find companies that can deliver returns for shareholders?
That's what my shareholders want me for. They don't want me making economic policies.
So then why should, if I'm a viewer of this program, why should I even care if there's a recession as reported by government data? If you work in financial services or the energy space or most retail, you haven't been in a recession
You get
last
it,
year.
Gary.
You've been in a
You get it.
depression. So I just ignore it all?
In my business, I'm not a politician. I'm not in government. People have hired me to make them money. And basically, that's my job. And everybody's trying to forecast the market. Since the Crusades, there has been no person on this earth who has projected where the market is going with any degree of regularity to profit therefrom.
Okay,
Charlemagne was pretty good at it, 800 AD.
Let me tell you why government's important. Just one example. I mean, look at the war on banks that we've seen going on right now. Talking about breaking up the big banks, confiscating their profits. I mean, even looking at Hillary's ties to Wall Street and vilifying Wall Street in midst of all that. Banks are the lifeblood of this country.
Excuse me, vilifying Wall Street. Maybe she should vilify government. There's more crooks in government than there are on Wall Street.
There is, and you're absolutely right. But you need banks out there making loans, doing their thing.
I agree.
Giving consumers credit in order to keep the economy flowing. And every time they crack down on the banks, they do less of that. And guess what? They have to raise fees. So it's harder on the consumer. That's just one example of why having a government who's so hostile to business and the economy is hurting people and is slowing things down and sending us into the next recession.
And I agree with that, but I guess the question I have for all of you is the next 2 to 3 years bullish for stocks and long-term bullish for the
It depends who's elected. I really think it depends who's elected.
And so you think that a Republican would be better?
Absolutely.
Republican.
Yeah.
What about you, Sandra?
Well, unfortunately, there's a lot of uncertainty in that question. We don't know who the candidate would be, and if it is a Republican president, we know that the policies that they're calling for would be more business-friendly of the candidates that are out there and address taxes in this country. Taxes are a huge burden on the American consumer and business.
And Bob, you said who wins the election is not going to affect your investment process, but who do you think is the best candidate that's there now for the economy?
I'm not going to answer that one because I don't know. I really don't. People say a lot of things, okay? Trump is very, out there, wants to change everything. Hillary has more experience. We know what people... I just don't go out there. I look at what's going to happen.
You look at the free cash flow.
You got it.
You got it. All right. Well, thanks to Bob Olstein, Sandra Smith, and Melissa Francis.
Talking point. Let's look at the free cash flow.
Next week, our guest is oil giant and billionaire T. Boone Pickens. We'll see you then.